Market influencers can definitely make waves in the market, but the key economic drivers determine which way the current will flow. Mark Parsons here with Remax. In this video, I'm going to talk about the difference between the key drivers of real estate and market influencers. I feel like this is an important topic to cover, as most people, realtors included, often confuse market influencers with key drivers of the real estate market. This can sometimes lead to poor decisions, as market influencers, although they do have a temporary impact on market activity, do not have the long-lasting effects of the key economic drivers. To put it simply, market influencers are factors that affect the perception that the real estate market is shifting, when in fact it is just being temporarily influenced. Sometimes the influence is strong, like when we saw the foreign buyer tax introduced, but the great thing about market influencers is that they can create opportunities for those who understand the difference between the key drivers and the market influencers. So let's take a look at some key drivers and market influencers so we can start to tell them apart. Under the key drivers, some examples are GDP growth, job creation, population growth, rental demand, vacancy rates, property demand, etc. Now, I have listed all those from a growth perspective, but they are equally as strong drivers when they are contracting as opposed to when they are growing. And that's how you can identify when a market is going to turn around. So what are some examples of market influencers? Interest rates is one, the cost of financing. When interest rates go up by 0.25%, the market always reacts. Newspapers write fearful headlines, and many buyers and sellers sit on the sideline and wait. Although this can have a short-term effect on the market, if the key economic drivers are still firmly in place, you can be confident that the dampening impact on the market is based only on the public perception, and that the market will move forward right through it. On the other hand, if interest rates increase dramatically to a point where they are affecting the key economic drivers, for example, slowing down GDP or reversing job growth or slowing down in-migration, then you would have to take a step back and analyze the market closer. Ease of borrowing or the availability of financing is another. This one is pretty simple. If money becomes harder to get or easier, the market speed will be impacted as a result. But if the key drivers are still strong, times like this can be used as an opportunity. Confidence in the real estate market is a big one. In markets where confidence is low, but the economic drivers of real estate are solid, and this happens especially in transitional phases of the real estate cycle, this is where some of the biggest real estate opportunities can be found. Government intervention is another one that can have a strong impact on the market. Government intervention can come in the forms of grant programs such as first-time homebuyer programs, or foreign buyer tax and speculation tax, which we have been added to our marketplace. When the foreign buyer tax was thrown on the market without warning, the market stopped dead in its tracks. But all that time, the underlying economic drivers were still strong. While the newspapers were writing doom and gloom headlines, those paying attention to the key drivers understood that this was temporary and that in time it would pass, which is exactly what happened. This leads us to our next market influencer, foreign investment in local real estate. Foreign buyers are a hot topic in Vancouver. It's very important that people understand that foreign buyers do not make or break our market, and they are definitely not a key driver of it. Although this foreign capital does add fuel to the fire of an already hot market and has added to the ridiculousness that we have seen here in Greater Vancouver, but the reality is that if we did not have the strong economic fundamentals we have driving our real estate market, this foreign money would find itself somewhere else to go. It is the fact that the key economic drivers in our market are strong that makes Vancouver a safe and attractive place for foreign money to come. And it's obviously a beautiful and international city as well. But I guarantee you that if the economy was tanking, these key drivers of real estate were pointing the other direction, we would see substantially less foreign capital in our real estate market. At the end of the day, it is important to understand the difference between the key drivers of real estate and market influencers. Market influencers can definitely make waves in the market, but the key economic drivers determine which way the current will flow. The key drivers signify the underlying economy supporting the housing market and typically take a year or two to see any major shifts. So if you watch them closely, you can see what is coming before it happens. For a more in-depth take on the key drivers, watch my video, How Can Anybody Predict the Real Estate Market? And once you understand the difference, you will no longer be swayed by the dramatic news headlines every time a market influencer is dropped in the market, or at least you'll have the chance to see it from a more objective point of view. If you're looking to buy or sell real estate, contact me today.